Wherever you are around the world, good morning, good afternoon, good evening. This is Dr. Nelson Ogunshakin, CEO from FIDIC. You're welcome to the fifth FIDIC COVID webinar program. We've had excellent four, session over the last 2-3 weeks. We cover geographical issues. What's the impact of COVID in different regions? We spend some time to look at issues about force majeure. What's the impact? And we also spend some time to look at the implication on the consulting industry and JV. Today, we are focusing really on looking at the insurance sector. And I'm really delighted to have a lot of good speakers around the world to support us this morning. Having said that, before I introduce you to the speaker, it's a delight for me to once again to invite the president of FIDIC to say a few words. Bill Howard, the floor is yours.
Thank you very much, Nelson, and I'll be very, very brief. First of all, I'd like to thank Nelson and his high-quality secretariat staff for putting these webinars on under very trying circumstances, to say the least. We're doing this essentially entirely remotely. We're dealing with the subjects that we feel are of most importance to our member associations, and we're pretty certain that we're hitting the right ones because the attendance at these webinars has been quite significant, and we expect the attendance at this one to be significant as well. I'd also like to personally thank our speakers today, who will be introduced in a moment. They put a lot of time in preparing their remarks, and I'm sure they are extremely busy doing a lot of other things in this very trying time. The subject matter today, risk management, insurance coverage, etc., is obviously very critical while we go through this pandemic, and will be especially critical in dealing with issues that arise after it. So looking forward to the presentations. I thank everyone for joining us. Again, thank the Secretariat for all of their hard work in putting these together, and the speakers. So with that, I look forward to the webinar. I'd like to turn it back now to Nelson.
Thank you very much, Bill, and thanks for your continued support. And we're so delighted that we've been continuously lucky to wake you up very early in the morning, United States, joining us. I do have a lot of interesting speaker. Just to set the scene, we are planning to cover this program within 1.5 hours. I've done the 5 minutes, which I'll be doing the introduction to complete, and then each speaker will be asked to give remarks between 5 and 10 minutes, and we'll cover that. Thereafter, there will be opportunity for me to open up the Q&A session, and I know a lot of the participants will be bursting to ask questions. So at a point in time when we are ready, we'll invite you to post your question online, and we'll be able to put it to the eminent speaker. But before we start, I just want to actually say, we're delighted to have, Tony Barry, who is our Vice President from Oregon, who is going to open up the speech, and then follow in the order of, priority, where we get Peter Tunnicliffe from CDM Smith. And we'll probably get, also after that will be Michael Earp from Aon, who is also based in the United States. Both of them are based in the United States. Then we have Nael, who is really a special advisor to FIDIC Contract Committee. And then we bring Mr. Michael Salau together, who is from Beale & Co from UK. So they're quite a clip of good people with a lot of things to offer. So I'm going to start off by going back to Tony. Would you pick up and set the scene in terms of your perspective on the subject? We are looking at the issue about insurance and what does it mean in the state of COVID-19. Tony, the floor is yours.
Thank you, Nelson, and thank you all for attending the webinar, and also thank you to my fellow speakers. PI insurance is a very important resource to consulting engineers, as is business interruption insurance, and to some consultants, contracts or risk insurance. I'm going to try and focus on a couple of important points as I see them, which are particularly applicable to the consulting industry. And there are no doubt many other perspectives that you'll hear this evening. which are equally important. Firstly, I'd like to paint a very brief picture of the insurance market as I have understood it for the last 10 years. And I think that's important because COVID-19 is literally coming at a time when the market has been, I'll use the term struggling, often known as a hard market. In between 2008 and about 2017, things went relatively well, and there were a lot of, there was a softer market in play, and there was a lot of cover available for consultants, which also involved providing terrific extensions to traditional policies to cover contractual breaches, warranties, and various other risks that consulting engineers take on from time to time. Now, that's not in every place, that's quite a general remark. But in 2017, a number of things happened, and that is that the Lloyd's portfolio in London had its biggest loss year. I think premiums were something like 170 odd million pounds, and I think the losses that year were about 217 million pounds. At the same time, it was one of the worst years, if not the worst, for insurers generally. So a very, very difficult time for insurers has developed since. And some of that is our doing. Some of that is other things around us. But we need to be very mindful that the risks we take on and the risk for which we have sought insurance have to some extent driven this. So I think it's firstly important to understand that basic PI insurance is designed to cover negligence, malpractice, and breaches of your professional duty that might occur against unforeseen matters. You shouldn't rely on insurance as a primary tool through which to lay off risk to another party. It doesn't work because it's not consistently there. The insurance market is cyclical, and in its moving around from time to time, you're either going to suffer very high premiums or you're going to suffer restrictions in cover that might occur. So a contract you might have taken on with some very onerous clauses 3 to 5 years ago, you might be struggling to find insurance to cover off those clauses today. So on the back of what has been a very difficult time, what does that mean? Well, it means that a lot of capital flies away from the insurance industry. It goes to find other places to invest because losses are not sustainable. It means that cover is restricted. It means that some of the contractual warranties and things that may have been covered recently or in recent years are no longer easily covered. And it may mean that some people are unable to buy insurance. If you add to that consulting engineers and architects and lawyers together, we're all in the same pool of PI insurance, and yet we account for a little less than half the total claims paid. So as a couple of professions, we don't do so well. So it's important to understand that if anyone's going to look around and identify the area where the loss is occurring and try and change their business model, if underwriters do that, they're going to be looking straight at us. It's also important to understand that consulting engineers, and you could argue or tell me that we have been forced into this position by contractors and by governments, taking on much more onerous terms that are well beyond what you might describe as basic professional duty. And that includes many things. For the bigger companies, they're required to exercise an expert standard of care or a very high standard of care. So the negligence, or the law of negligence, which others I'm sure can discuss much more effectively than I, the law of negligence, the bar is lifted in that circumstance, and what is expected of the major firms is a much higher standard than might be expected of a suburban operator. So with that background, we're now in a position where we're in a pool of insurance which is under stress. We're in a market where capital is looking for somewhere else to go, and then we find ourselves in the midst of a COVID-19 crisis. So as an insured, in my view, your first duty is to mitigate any losses you might incur, and that will include notifying your clients under your contracts, making sure that you exercise your rights. If you don't exercise your rights under the contract, you don't put in place the right notices, why should an insurer support us if we're not prepared to do that? So it's very important we don't see the insurer as the place of first resort to cover off some problem we may have. Now, many firms are very well equipped and literally within a day's notice were able to convert their whole operation internationally to a working from home approach. Working over VPNs and all sorts of technology, they were able to do that. But not everybody is in that situation, and many firms will find themselves under stress trying to meet deadlines in particular and complete work when it is due. So it's very important in my mind that we do not look to insurers to cover this off. If we, in the midst of this, breach our professional duty, commit an act of negligence, well, so be it. It would be covered by insurance, no differently to any other circumstance. But it's unlikely, in my mind, that COVID-19 itself will be accepted as cause or a causal link which gives rise to a claim. In many countries, and certainly in the one I live in, it is actually the government's action issuing directions under our Biosecurity Act and various other acts which have prevented people from entering their workplaces or doing their work closely working in teams. It is a government instruction, and under many policies that I have read over time, that becomes a circumstance which may or may not be covered. And I would suggest to you, it doesn't add anything to the difficulty. It's a commercial risk. It's a risk for which you could have planned. A pandemic plan in the company I work in was put in place in about 2010 after the avian flu episode. So in my mind, this does not create very special circumstances for consultants. It may do so for contractors, and people have talked about two causes, one an act of God and the other one force majeure, and under the laws in different countries that may give rise to some relief. But I do urge us not to see PI insurance as some sort of saviour to get us out of the difficulties we now face. And I urge us all, for the sake of insurability of our businesses going forward, to work as hard as possible to mitigate any loss that you might believe even is COVID-19 related, because we will put the insurance industry out of business at some point, and the only way it'll come back is with extremely high premiums and very restricted cover, which I don't believe is in anybody's interests. So I think, Nelson, with that, I painted a bit of a glib picture there and a glum start to our webinar. But the reality is, I don't believe COVID-19 changes enough our situation. We created it and we've been living with it for the last number of years. And it's very important in my mind that we find a better way forward generally. Thank you.
Thank you very much, Tony. I think that background on the purpose of PI is actually quite important and really set the scene, because it's important that we understand what is the purpose of professional indemnity insurance. I think touching on the purpose of PI, understanding the structure of the market, understanding the current situation and what we may do to impact the market, the capacity that is flowing in and out, and basically saying we may need to consider that the PI is not going to be the solution to the issue we have to deal with. But you also make it quite clear that the situation between consultant and contractor may be slightly different. I think you've set the scene in terms of where the conversation is going to go. I think it would be important for us now to bring other speakers together to share their experience. And I really want to invite Peter Tunnicliffe, who is the president of CDM Smith Construction, within a consultancy practice, but with contracting element out there. I know his experience is going to be focused mainly on North America, but it'd be interesting, Peter, for you to take the floor and follow what Tony set out. Peter, the floor is yours. Thank you.
Thank you, Nelson, and thank you, Tony. Thanks to all who have joined us today. My remarks today are going to focus from a design builder and general contractor, and as Nelson indicated, we operate primarily in the U.S. markets, both on mainland U.S. as well as territories and for U.S. clients abroad. And the just a quick note on to follow Tony's, the added stress on the PI market actually took place as more and more projects began to take delivery in the U.S. on a design build basis. And one of the reasons that our firm does design build work together is that we don't get into the tug of war where the general contractors feel that PI is their solution for the contingency risk that attends to a project because of the different standard of design versus the expectations of the contractor that everything they need is going to be shown on the plans and specs. And so that's some added stress. My remarks really are not going to focus too much on PI. I'm going to present the vision of, okay, so we have a pandemic, and what do you do as you find out about this and you have thousands of craft in the field on construction sites? And so as you consider this matter, you first wonder how many of our sites are going to be shut down, and is that going to be by the owner? Is it going to be by a state or a governmental unit order? And those projects will have somewhat of a catastrophic effect on your financials. But one of the things that we were fortunate is that most of our projects fell into an exemption because they were deemed essential infrastructure. And so we do a lot of work for the U.S. Department of Defense as well as for water and wastewater facilities across the world. And so these were deemed essential projects that could continue. So then going through with the next consideration is, well, how do we react to this in a uniform manner across 120 offices and about 30 different construction sites? And what about our staff? How do we deal with the health and safety aspects? So those became paramount as the first threshold issue to face is what do we do to mitigate the spread of COVID-19? And that became somewhat of an evolving issue as more and more information was known about COVID-19. And so every firm has their own health and safety programs, and they definitely went through modifications that many had not even considered before, that included rotating shifts to avoid having your entire management team go out due to an exposure, to social distancing and how you do social distancing when you're trying to build some complicated works. And so then once you've dealt with the staff safety, then we have to look at what notices are required. This is a period of reviewing all of your contract terms as well as reviewing your insurance terms, because you have notices that are required both to your owners as far as a force majeure event or an uncontrollable circumstance, as well as notices to your insurers. Interestingly enough, the subject of builder's risk is one that there is a lot of focused attention on. It is very definitely a gray area. As you will hear from our various speakers today, there needs to be some physical damage in most cases for builder's risk. How that is being interpreted is gotten quite creative by a number of individuals, and we're not sure where that's going to end up. And so from the design builder's perspective, we would rather have it either a definite yes or a definite no, because in many cases, it will become a bouncing ball between the owners and the insurers, with us caught in the middle. And so the terms of the policy are very important. And I encourage all of you to make sure that you look through those and work with your insurance brokers. The one thing that I think is most important with all of these matters associated with the COVID-19 are that you need to work with your insurance agents to understand the interpretation of your policies. And because of the gray areas, it's going to be tackling this together so that what few dollars remain in the insurance industry are not spent primarily on legal battles. So the potential damages associated with COVID-19 on the construction sites, there are quite a number of these. I'll go through several of those later on as we go into more detail on some of the questions. But I would say the key takeaway there is make sure that you have excellent records of all the areas that are impacted by COVID-19. Whether your craft declines, whether you have craft that go out sick, your additional PPE, lost productivity, all these things are very hard to calculate, particularly if you don't start with the record keeping on all of your impacts as soon as you begin to face getting your operation continuing. And so with respect to what insurance policies to look at, obviously general liability is probably one that you would look to, but there's no real affirmative coverage in most of the general liability policies. Some may have it. So again, read the terms. I mentioned builder's risk. The property insurance is probably more important for those of you who had your offices impacted as opposed to field offices. And then workers' comp coverage is going to be a potential area. Right now, I think it's probably being treated as similar to a flu-like symptom, but that could very well change in time. And then look, if you have environmental coverage, there may be some coverage there that might be pertinent. And just a quick last tale before I turn it over to our next speaker. The risk managers that work for Wimbledon did a fine job in that they placed their event cancellation policy, and one of the covered risks was a pandemic. So they are the happy recipients of over 100 million because of that inclusion. So I think that as far as where we see coverage for pandemic in the future, probably not going to be too easily available. And we'll talk later about some of the ideas in the marketplace for handling that. And so I'll turn it over to Michael Earp.
Thank you very much indeed, Peter. I'm going to be covering some of the areas that have already been discussed during this webinar. I'm going to talk firstly about those insurances that directly affect consultants, and then I'm going to talk a little bit about project insurance. I think the opening remarks from Tony Barry need to be put into perspective because some people may be aware that there has been a class action brought in the US, and we'll have to see where that goes. That's going to run. It's going to take a long, long time before that results in any decision. And there may be some state legislation or territorial legislation that is brought in by governments across the world. But until we have more clarity on that, I think we first have to consider what is the position of insurers for this event. Most policies require a direct link between the loss, be it physical loss of damage or bodily injury, and there has to be a direct link between that and for a policy to pay. Therefore, general slowdowns of the economy are typically not insured, and nor are casual introduction to the pandemic. It has to be very precise and very specific, and it has to be measurable. And because so many firms are able to work from home, the actual loss that could be paid will be subject to a lot of forensic accounting. That's all I'm going to say as a general comment, and I'm now going to run through a few policies. The first one is employer's liability or workman's compensation that each consultant firm will have, and this is for their own workers. In that situation, the point is there could be coverage for bodily injury, but the link has to be made that those workers contracted it at the workplace. If they, for example, they contracted it whilst they were commuting, that is what's called a casual link, and it could prove quite difficult to establish whether there is coverage under the policy. Peter mentioned a few moments ago general liability. Yes, general liability is important because you may be at a site or whatever, one of your workers may pass on the pandemic to someone else, or all the conditions of the workplace may pass on to a third party. But again, we consider that the construction project presents a very low risk of this type of exposure. Again, negligence has to be proven against yourselves, not just the fact it happened, but under a general liability policy, you have to actually establish negligence. Moving on then to property damage. Yes, property damage at your own premises, because you are prevented from a general order to actually go to your premises, and there is property damage at your premises. There could be a flood, there could be a fire. This is something which I think would be potentially covered. You have to look at the terms of your own particular policy. But again, we have to bear in mind that if there is a general order not to travel from the state or the government or whatever, this could be an argument used by insurers why a claim may not be paid. Business interruption. This is the one that is causing probably the most angst for a lot of people. These are business interruption as a result of a direct result of a peril. Now, a peril has to be defined somewhere, and unless the peril is defined often, then the business interruption policy won't pay. However, sometimes the insurance policies to which the business interruption applies to will be for all risks. In that situation, you have to look at the exclusions to see whether or not a pandemic is excluded. And the area you probably need to look at most carefully is any losses arising from viruses or bacteria, which insurers at this point in time have stated could include COVID. So again, you have to look very carefully at the policy. As Peter mentioned just a moment ago, look to your environmental policies, sometimes called contractors' pollution liability. There could be some coverage in there for if there needs to be disinfectant or decontamination of a site. Again, the policy terms will govern how each policy is covered. Now, under some policies for professional indemnity, or as called in the US, professional liability, that can have a pollution extension to it. So therefore, depending upon the wording of your policy, the discharge or dispersal, release or escape of viruses, there may be some element of cover. But again, check very carefully. So that's talking about the policies of the consultant. And I now wish to sort of move more into practical aspects that are going on. You've already had a webinar with regard to act of God and force majeure. I don't wish to cover that ground again, other than probably design build is one of the areas that's most in focus at this point in time for suspensions for projects. We foresee that there will be extensions granted for projects delayed if you're on a project policy. However, there will be an additional premium on builder's risk, contractors or risks. The property is still at risk, so therefore there could be a fire or water damage at that particular site. So therefore insurers would expect a premium. Typically under a professional liability, professional indemnity single project, insurers, it could be argued that insurers' risk has not extended. However, they still have to service a cost of capital. So again, if an extension is required where there's project insurance in place, you need to speak to your advisors sooner rather than later, and then for them to then discuss with their insurers. One of the biggest risks is going to be a disruption to the supply chain. And I would totally reinforce Peter's comments. Keep very, very good records. Don't be in any way blindsided with regards to change of scope or complexity. Be very careful, the temptation for substitute of materials, or whatever you do, make sure you have good communication and speak to your clients. In fact, that's the first overriding message I would say. You know, if you are unable to perform your services the way that it's been articulated in your terms of agreement, speak to your client and say, this is the situation, how do you want us to perform our services? And then depending upon what your client says, that's how you should then proceed. I want to finish off really by saying, you know, it is a very difficult insurance market, as Tony Barry said at the very beginning. This coming on top of the Lloyd's review in 2018 means that insurers are looking very carefully to change their appetites. And I think one thing I would do is just speak to your advisors, your insurers. If you've got any concerns, do not make any assumptions. That's my opening remarks. And I'd like to hand over to Dr. Nael Bunni, please.
Can I just jump in before Naomi come in there? We've had two excellent speakers. We have Peter Tunnicliffe look at it from CGM Smith, which is the design and build focus. And I think the key essence of what I pick up there was about the builder's risk. And there's a number of, points to pick up, and I'll come back to later. But also listen to Michael, it's quite clear, both looking at the consultant and the number of policies you raised, from the issue about employers' liability, the general liability, property liability, business interruption, and then looking at the environmental policy. You quite clearly said, look at your policy, look at your terms and communication. And I hear the word record. Once again, I think that's quite important. I think what I want to do now is to invite Nael Bunni, if you can give us your perspective as a special advisor to FIDIC, who understand FIDIC contract and all the various clauses in the FIDIC insurance policy. So I'll probably say, Nael, can you take the floor and give us 10 minutes of your time on that particular issue, looking at it from FIDIC specific. And then later on, I'll invite Michael Salau to close out on just looking at it from legal point of view. Dr. Bunni, can you speak? The floor is yours.
You want me to start?
Yes, please.
Right. Well, I would like to start with some remarks on risks and insurance, general remarks. And I would say that when a party initiates a construction project, it retains all the hazards and risks to which that project might be exposed. However, that party, referred to as the owner, cannot retain all these hazards and risks and would generally have to transfer some of them to those involved in the construction of that project. Traditionally, the transfer of these hazards and risks is carried out through the use of two contracts. The first is a contract for the provision of services between the owner and a consulting engineer, which is used in the FIDIC as the White Book. And the second contract is between the owner and the contractor, which in the FIDIC terminology is either the Red Book, the Yellow Book, or the Silver Book, or in fact even the Green Book for a smaller type of contract. From the second contract, the construction contract, a second line of risk sharing flows between the contractor and his subcontractors, suppliers, manufacturers, and others involved in the execution of the project. It is accepted that the hazards and risks associated with a construction project can generate huge losses and liabilities, which in turn require indemnity to be provided between the contracting parties. If these indemnities and liabilities are beyond the contracting parties' capabilities, insurance is the only option that can be utilized to make sure that the construction project is completed in time and on budget. Accordingly, some of the hazards and risks are transferred to the insurance sector through insurance policies required under the two contracts that I mentioned earlier. The sharing of hazards and risks, or their allocation, is carried out on the basis of the following four criteria of risk allocation. The first one is which party could best foresee the risk. The second criteria is which party could best control the risk and or its consequences. The third criteria is which party could best bear the risk. And the fourth one is which party ultimately benefits most or suffers when the risk eventuates. And I can give you examples later on if you require on each of these criteria as used in the construction contract. So the relevant clauses in the FIDIC contracts that deal with the topic of hazards, risks, liabilities, and indemnities are as follows. First of all, if we take the White Book, Clause 8 deals with liability, and Clause 9 deals with insurance. And I will explain later on how these interact. Now, the red, yellow, and silver books have the clauses 17, 18, and 19 of the general conditions of contract, together with their relevant supplemental provisions, which appear in the conditions of particular application and the appendix to tender in the 1999 edition, and these are referred to as the contract data in the 2017 edition. It's important to note, however, that the structure and content of the above reference clauses were extensively changed in their last edition. The first edition was published in 1999, and the second edition was published in December 2017. And a careful study of these clauses need to be carried out to understand them and to establish their intent. However, to take these two contracts more explanatory way, the provisions are as follows. In the White Book, which is referring to the service agreement, we need, first of all, to pay attention to clause 1.1.13, which defines exceptional events. This is an important aspect of the White Book because the White Book does not deal with risks as such. It goes straight into liabilities. But the exceptional risks are defined in 1.1.13, and then 4.6.1 deals with the exceptional risks if they eventuate in the duration of the contract of service. Subclause 3.8.1 deals with the safety and security of consultant personnel, and it's in very particular aspect. In this very particular aspect, it's related to the subject of the webinar, which is the coronavirus. Subclause 6.1.2b, which deals with suspension of services, which could happen if the safety and security of the consultant personnel is compromised. And then we have subclause 1.5, which deals with changes in legislation, which is also extremely important in our case if there is a lockdown, if there is a legislation or a legal requirement to lock down on the personnel. So therefore, subclause 1.5 becomes an important aspect of the White Book. In short, however, I don't have time to go through each and every one of these clauses, but in short, the idea is that these provisions can be utilized to conclude that the consultant can argue that COVID-19 is either a man-made catastrophe or an event of natural catastrophe, which does in fact compromise the health, safety, or security of its personnel. So that takes you to 3.8.1, and if the consultant feels that virus has compromised the safety and security of the personnel, then it can suspend its services under 6.1.2b. And as I said, if we have a lockdown, then 1.5 comes into operation under the White Book. Now, to take then the construction contract, the red, yellow, and silver forms, either first edition of 1999 and the second edition of 2017. It's important to note that the relevant clauses in these forms of contract are changed, and they are very complicated, and one needs to understand them and understand the hazards and risks in construction that are generally divided into two parts or two types. The first one are the hazards and risks that result in loss or damage, and secondly, other risks and hazards that result in financial and time losses. This division between the losses, the risks that lead to loss or damage, and the risks that lead to financial and time losses is based on insurability, because the risks of loss and damage are required to be insured and are insurable. However, the risks of loss, of financial loss or time loss are generally, and I underline generally, are not required to be insured and are not insurable unless they are specifically mentioned and specifically contracted with the insurance company. So, taking first clause 17 of the 1999 edition, it deals with risks and responsibility, and clause 18 deals with force majeure, and clause 19 deals with insurance. In this case, and if we look at the 2017 edition, the order of these clauses was changed. And this is something to pay attention to because the content and the structure has also changed. And clause 17 deals with the care of the works in the 2017 edition. Clause 18 deals with exceptional events, which replaced the term force majeure, but to a certain extent it's very much the same, to the same effect. And clause 19 deals with insurance, so you can see that there's quite a change in the structure. Thus, the contractors of risk insurance policy, which is required to be issued under clause 18 of the 1999 edition, or clause 19 of the 2017 edition of the Red, Yellow, and Silver Books, covers loss and damage to the contract works, to its materials, and to plant. In this connection, you can look at clause 18.2c and 19.2.1a, respectively, in the 2017 edition and the 1999 edition. It does not cover financial and time loss. This clause for contractors of risk does not cover financial and time loss and is not required to be insured either. And these are, however, the main consequences of the COVID-19 disaster. There is, of course, some loss and damage, or could be some loss and damage, if, for example, plant has been left unattended and suffers damage, or if something happens that results in unattendance during the interruption. However, it should be noted that for the 1999 edition, subclause 18.2d does require cover to loss or damage from the risks listed in subparagraph H, and that is related to the employer's risks and related to the forces of nature or operation of the forces of nature. So there may be some requirement to insure the forces of nature or forces of force majeure as a result of a man-made disaster, but this only covers or only required to cover loss or damage again. The other insurance covers required under the 1999 edition are related to third parties and contractors' personnel that Michael dealt with earlier. However, it should be noted that there are two items that may have significance in relation to the COVID-19 disaster. And these are, and should really be taken note of because they're very important, subclauses 19.4 and 19.7, which 19.4 deals with the consequences of force majeure and is relevant if the coronavirus is accepted either as a man-made force majeure or force majeure. Either as a man-made force majeure or as a natural catastrophe. In this case, the contents of subclause 19.4 permit the contractor to get time and cost in the first type, or only time but not cost in the second type. The second item relates to clause 19.7, which provides for the release from performance under the law in the case of an event which makes it impossible or unlawful for either party to fulfill its contractual obligations. I'm here referring to the lockdown. So if there is legislation or a requirement to lock down, then under 19.7 of the 1999 edition, the contractor may stop or is released from performance. Now, moving on to the 2017 edition, clause 17 relates to loss and damage to the works, goods, and documents. Clause 18 deals with the exceptional events, and subclause 18.1f deals with the natural catastrophes. As in the 1999 edition, the equivalent of the two subclauses 19.4 and 19.7, which are 18.4 and 18.6, apply to the 2017 edition in the same manner explained earlier. Now, Clause 19 deals with insurance, and as in the 1999 edition, the contractors of risk insurance policy is issued to cover, once again, loss or damage to the contract works, materials, and plant. However, an important variance from the 1999 edition it goes on to the insurances which can be excluded, and under item 4, Roman 4, unless otherwise stated in the contract data, the risks arising from the exceptional events are not excluded. And this allows the employer and the contractor to cover some of the risks related to exceptional risks or force majeure into the contract.
Bunni. Thank you very much. Would you,
I've exceeded my time.
Yes, please. So thank you very much for that insightful journey through 1999 version and 2017. I mean, the message I heard is distinction between the insurance policy between the client and the engineer, which is on the white book, and between the client and the contractor, which is under the red or the yellow book, and going through the various who is responsible or can have capacity for carrying the risk in terms of the 4 categories you raised. And you also went on to talk about the distinction of various, clauses between 1999 and 2017 version. We will have an opportunity to come back into individual, and I'm sure there's a lot of questions coming from the floor. At this point in time, I would like to invite Michael Salau to give us his thought on the subject. We've talked about, the market. We've talked about from Aon. We've talked about it from CDM. We've also looked about, from the point of a FIDIC various contract. So Michael, can you give us your take from legal point of view? Michael, the floor is yours. Thank you.
Thank you. Good morning, everybody. And thank you, Nelson. And good morning to everybody who has joined in to today's conference. As Nelson has said, I really want to offer a few comments from a lawyer's perspective in relation to insurance as a result of the COVID-19 pandemic. And just taking it back with some general market comments, first of all, because I think that is relevant. Obviously, you won't be surprised to know that insurers' appetite for market post COVID-19 is likely to be very limited. We already are aware of the fact that some active underwriters are moving back from the market, and I think they're going to be very cautious before we enter it. Why is that relevant? Well, it's relevant because, of course, we're not just talking about what insurance we've had in the past or what current insurance we have, but what's going to be happening over the next 12 to 15 months. Already, of course, insurers are giving serious consideration to how they are going to draft their proposal forms going forward. And of course, there is going to be a focus on COVID-19 risks. So as an insured and as a consultant, when looking at those proposal forms, you're going to have to obviously look at them carefully. As we will well be aware, COVID-19 exclusions are being prepared for renewals. So again, that's something that needs to be taken on board now and looked at closely. As always, reinsurance terms drive insurers' behaviour. And I suspect that there's going to be certainly some extended delays in binding renewals. The flip side of that, of course, is that we know, not just from the UK perspective, but certainly from colleagues abroad, certainly in the US, Australia perspective, insurers are going to come under pressure from governments in relation to the enforcement of insurance terms and in relation to the determination of exclusions and whether they are viewed from a narrow perspective or in a much broader or wider sense. And obviously from our perspective, acting for consultants, we would like them to be viewed in a much more broader and wider sense. So now moving on to just picking up some of the points that were made earlier. Obviously from a lawyer's perspective, the primary insurance that we're going to be looking at is obviously professional indemnity insurance. Now, I think as everybody knows, professional indemnity insurance is made on a claims made basis, and it applies for, and I think one of the earlier speakers said, it really affords cover in relation to some form of negligence in respect of the provision of the consultant's professional services. So I think that in itself obviously suggests that as a policy, it won't necessarily respond to COVID-19. But what I think we're going to see, of course, is where claims arise and where the policies look to, where as a result of the impairment of a consultant's performance of their services, claims arise from. And that links back to what people have previously said. So, for instance, where a consultant is operating the contractual machinery, so that's in relation to extensions of time, etc., and a claim arises in the future, then we're going to look back at the fact that that consultant maybe have impaired the way they provide their services, maybe because, of course, now there's stress on resources for a consultant. Many consultants are working from home as a result of imposed downs, then claims may well arise from that. So again, that then links back to a comment that was made about record keeping, I think by Nelson and also by previous speakers. When you are operating the contract, I think it's more important than even usual that we look and make sure that we keep these records carefully and have in mind the fact that we know that claims are going to be arising in the future because of the pressure and the stresses that are on contracts and on projects at present. Moving on from the professional indemnity perspective, as a lawyer working within the construction field, I think there were two areas that were touched upon: other insurance policies, public liability policies and employers' liability policies, mainly in relation to whether or not as a business owner, as a consultant, claims arise as a result of somebody being affected by COVID-19 or actually suffering from COVID-19, either maybe on a consultant's, a client's premises, or as a result of working in the consultant and clients. So again, those policies will probably be looked at. I think later on today we may discuss business interruption cover and contractors all risk cover. I think, as we know, that it's currently include have pandemic include government authority cover, insurance against the result of a government enclosure. That BI point is linked to, I think somebody mentioned the possibility of also looking at policies in relation to contractors' pollution liabilities policies, because often there is a BI element to that. I think in relation to that policy in particular, as people will be aware, that policy responds to often a kind of one-off event. So it's where there's some form of sudden, accidental or gradual pollution event. And often a pollution event, a pollutant does not include viruses. There has been some suggestion, though, that a policy including will bring virus in, and as a result of that, COVID-19 may well be brought into that. And I think someone mentioned earlier on, if that's so, then maybe we'll some cover if there is incurred in relation to decontamination of a project. I know also there's been some touch upon project insurance, and I think we'll probably talk later on. But what I wanted to bring together the facts is that, unfortunately, I think from a pessimistic perspective, often we know that clients may well look to professional policies being there for their benefit. Of course, they're not there for their benefit. They're there for the consultant's benefit. They're indemnify the consultant. But what I would say in relation to any policies is, first of all, please look closely at the wording. There are options and what will be hasn't there, and also with whatever record keeping or information is required there to be sent to the broker. And as I think when I started with this, let's look to the future. We know the market has been difficult and the market's likely to become more difficult in the future. So have in mind, what do we need to do now as a consultant to make sure that we can get the best cover available in a post kind of COVID-19 pandemic world? Thank you, Nelson.
Thank you very much, Michael, for taking us through that legal perspective. I mean, I think you echo the issue about the market structure rather than where Tony started looking back at what's happening, but you're actually saying, is there going to be appropriate wording post, COVID-19? And how is the market going to be structured? You echo the issue that the PI is meant for the consultant, is not really for the client, but hey, be careful because the client may actually come after you depending on how you say it. You echoed the issue about record keeping again. I think this is a message that keeps coming through. And I see the distinction between employer liability and the public liability, which are issue you also raised. I mean, at this point in time, I know that we've got up to actually 590 people currently online who are, observing and following this particular program. I'm just going to start off with a few questions, to the panel. And I will suggest, please, mute your mic. And then I'm going to start with a few questions. Then I'll take questions from the floor. So for those who are observing, who are following us, this is the time for you to put your question forward. But let me start off by raising the question. I mean, Michael Earp, if I start off with you, you alluded to the point about project insurance, but you didn't go really deep dive into it. You just touched on the subject earlier on. And so if I can bring that back into it, do you think if project insurance was in place, and we now have this COVID-19, does that mean that it would have covered everybody, or am I being naive?
It's a very good question. I think what we first have to consider is what are the losses arising from COVID-19 under such project policies. Now, project policies are going to be often four will be considered. There'll be the contractors all risks, contract works builders risk, as it's commonly called, and that talks about damages to the works. I think we can draw a comparison here with the closed down during the global financial crisis, where we saw a lot of projects were put into sleep mode, and they degraded over the course of time until work started again. In that situation, underwriters said, no, it wasn't covered under a builder's risk policy because you had to put into measures to mothball those projects. So that is, I don't think there is much there. That there could be similar to property insurance if there was a specific event like a fire or water damage because you couldn't get onto site. I think there is the possibility there could be coverage in those respects. And as I mentioned earlier, that there is no business interruption usually taken out as a result of contract works insurance. General liability, I think I mentioned already, that is again a project policy, can be a project policy. But again, it's the casual link. How can you say that what happened there was strictly as a result of what happened on site? Professional liability is very interesting because, as Michael Salau mentioned, it's a claims-made policy. So probably we're not looking at the here and now of things that are going on project. It's more a case of what's going to happen when we go back onto site or when projects recommence. And here I definitely see a link between what's happening now and the global financial crisis, that you could almost see like businesses will be like a champagne cork coming out of a bottle, everyone demanding resources. And will the consultants actually have the resources to be actually fulfill that? And I think that is going to be one of the main issues. Supply link, I've mentioned about supply chain and the business impact. And I think those are going to be the more critical elements coming afterwards with regard to professional indemnity. As regards to your question, are you being naive? Never. You're always optimistic, Nelson. But I fear, as already said, the fact is these are not perils that were contemplated by insurers when they underwrote the policy. Now, whether the policy includes it or not, or otherwise, will depend policy to policy. And that's why you have to check very carefully on each policy terms.
Right, thank you very much for that. I'm going to throw a question to Tony, and perhaps Michael Salau will jump into it, because both of you looked at it from the dimension of capacity. And I think a lot of people sometimes don't really get the gist of how the market reacts to a major issue that happens. And Tony started by saying the meltdown in the Lloyd's of London have a big ramification, and that the market is going to go hard. And also Michael Salau talked about, yes, the market will respond. The question I have at the moment is really, is it possible right now to actually go out and buy, a COVID-19 cover? Is the wording, or is it available, or is the market going to take a while to see what come out of the claims procedure before they respond to that? And that's a question to Michael Salau and to Tony. Michael, do you want to jump in?
Sure. Okay. Thank you, Nelson, first of all. Well, obviously, it's a question that probably will be more ably answered by a broker. But what I would say is, I think it's going to take some time before we see any cover afforded in relation to COVID-19. And frankly, I would think even if it was available in the future, and I think that's doubtful, but even if it was, then obviously it's going to be pretty expensive. But that, let's remember that there is wording within policies at present, obviously, that do exclude pandemics. So I would have thought, the likelihood is it's going to be doubtful, something that's out there, but the reality is, if it is, it's going to be expensive. I think probably what we need to look at is, as I've said, you look at these claims under a policy. COVID-19 is not covered at the moment. I don't think it's going to be covered in the future. But what we really look at the insurance claim is what the construction project. Seen from a general perspective, it'd be something that's much, much more relevant. A micro event rather than a macro event. The inability to carry out work because you're strapped by resources. That's one of the things that was just mentioned earlier on.
Okay, thanks very much, Tony. I mean, you have a very vivid view of the market, and you set out about how the market may get harder. Is there something in the market right now, or do you think it will be a challenge in future to actually buy a cover under our normal practice from the market? Tony?
Very good. Look, thank you, Nelson. Very good question. I think the first thing I'd say, the Decile 10 review that Michael spoke about was a pretty alarming review, and it highlighted quite a number of Lloyd syndicates that were operating in loss mode and had been for some time, and they were asked to indicate their intentions going forward, and 5 of them responded by indicating that they are going to make a decision to exit the PI market altogether. I think our problem is more serious than COVID-19. Certainly COVID-19 isn't helping anybody. Certainly understand that. But I think what is important is that we need to have a viable PI insurance market. And at the moment, if with the history of all that's gone on in the last several years, capital has flown that market. People are pulling out of it. And I think it's going to be back to the consultants and possibly the member associations of FIDIC to work very, very hard to help their members and to help the dialogue occur such that the contractual conditions that are adopted in a lot of countries do not expose consultants unreasonably to contractual claims that might exist in a head contract, in a D&C, a design construct environment, or otherwise. Now, my own experience is that most of the losses, the big claims, all sit within D&C or design construct contracts. And so I do think there's going to be a lot of losses in general business taken in this COVID-19 circumstance. We can't walk away from that. It's going to be a number of years before we all come back from it. It's not simple. And I do think the insurance market in one sense is going to be no different. But I do think the consultants who are in this somewhat difficult position of being forced to accept these terms from clients on the one hand possibly need to become a lot stronger in resisting them, because I don't believe the insurance market will be in a position to offer particularly cover for some of the more extreme contractual warranties and onerous terms.
Thanks very much, Tony. I mean, I've got a lot of questions I want to ask you, but I think it's about time now I start picking up questions from the floor. As a question from a gentleman called Graham Hooley. He said, can EPC contract by, I can just miss, I think if I just get back into the text, I think screen, well, let me just rephrase the question. I think the question has come through. Perhaps this should go across to Tony again, or to Michael Earp. Is the idea that the PI that we buy at the moment that we actually talked about is not just purely the market, it's not purely the consulting engineers. What happened in other professional services, the legal profession, the solicitor, all of that also impacts what happened in terms of the capacity for our sector. So is it a case that the claim in our sector is pretty high that will cause capacity to move away from consulting engineer? Or is it a case of what is happening in the basket of insurance markets, particularly in professional area, that may cause the market to harden? Tony, do you want to respond to that?
Yeah, I was just quickly going for my notes because I did look at this issue earlier today. The reality is that we unfortunately account for the most number of claims, the architects and engineers, the greatest number of dollar value of claims. We also, we are ahead of the lawyers, which is always a sad thing. I wish it were the other way around. So we are in a place of being vulnerable. And if you were, you know, I have been the chairman of a captive insurance company in my time, and I'm now in a wealth management company. If you are purely making a decision about the return you can get on your capital, why would you place it into a sector where the losses are excessive? And the answer is you wouldn't. And you'll find better places to put your money. And I think that's an enormous challenge to us. And we have to work pretty hard to change the culture in our industry to improve that situation so that insurance is, one, available, and two, affordable, and really puts the industry back in a healthy position.
And if I could supplement that very, very quickly, I totally agree with what Tony said. Yes, the construction classes were the bottom of the league table as regards to claims. In other words, they were the worst offenders when in the Lloyd's did the decile 10 review. I would also like to hark back to something that Peter Tunnicliffe mentioned earlier. I think a lot of the reason we have got claims in the construction sector, remember, design build is written by the same insurers who write architects and engineers. And I think the procurement model of design build, particularly GMP, a lot of the claims that were coming in professional indemnity, professional liability, are a result of underbidding and people trying to find a way of passing those costs on. And quite often that comes in the format of either the design builder claiming against his insurers or the design builder passing it down to the architect and engineer. And a lot of that comes from the underbidding, which harks back again to the global financial crisis, because again, people were desperate for work. And some people have said that the current market position is an echo of a post-GFC rebound. Everything happened, people were rushing to take on work and under-resourced and underpriced.
Thanks very much. Another question is, can EPC contractor claim cost on their all-risk policy? I think, you know, I'm going to put that across to Peter. As in CDMC, and getting involved with EPC contract, are you able to claim for all risk on the all risk policy? Is that doable, Peter?
Well, that's a good question, Nelson, and I think that this is one of those gray areas. You need to look very carefully at your builder's risk policy or all risk policy. I will share with the audience a quote standard response from an insurer providing builder's risk insurance. Coverage under a builder's risk policy is tied to direct physical damage to the works, fire, explosion, hurricane, etc. COVID-19 most likely will not trigger coverage for direct physical loss or damage unless there is actual COVID at the location and the project is shut down to disinfect. That delay time to disinfect most likely is considered a covered delay. So that's an example of what the insurers are trying to do to bracket any coverage under the builder's risk policy. Whether that interpretation prevails really is going to be tested over time. I don't think it's a black and white situation. It's one that will be interpreted. It gets back to trying to look at your entire suite of coverage. But if you figure out what your potential losses and impacts are on the job, you have to look at both time extension related impacts and as well as what cost impacts are, and figure out what those are. It's just a quick rundown. I mentioned craft reductions as a result of concern by the craft and them not showing up. So you want to track your craft numbers over time. It's very important that you update your schedule to reflect the impacts, and that would be impacts of taking longer on certain performance activities, as well as impacts from suppliers who could not deliver key equipment and materials in order to proceed with the works. Any shutdowns to disinfect, additional PPE, extra safety activities that are needed, and added general conditions costs, and get all these documented, and then figure out where have you had the greatest impact, and is it recoverable under any of your insurances, and is it worth the fight? And this is personal opinion, is that the most important thing that's going to come out of this is the need to recognize the impact by way of time extension. Okay. That's obviously not the legal opinion, but I will tell you that for those of us who have had our projects continue, that's probably the primary emphasis.
Well, I think what I hear is more pragmatic solution rather than a legal solution. There's a question for Dr. Bunni, which says, if government declares COVID-19 as a natural calamity and issues notification to lockdown, then can the contractor claim costs arising due to wage payment of staff and workers under the lockdown condition? That is to Dr. Bunni.
Are you talking about the lockdown happening under legislation?
The question is that if the government declares COVID-19 as a natural calamity and issues notification to lockdown, which happens in most countries,
that's right.
Can the contractor claim costs arising due to wage payment of staff and workers under the lockdown condition? As you know, different countries have different packages and incentives, during the lockdown. I think the question is, under the contract, can you actually claim from the client?
Well, I can't see, unless you name the policy that you are referring to, I can't see it anywhere within the policies required. And so in here you have a claim against the employer. And if the claim is against the employer, then first of all, we have to decide where does the lockdown fit in? Is it part of the natural catastrophe, or is it a man-made catastrophe that has occurred? And that's a very important question, which really has to be decided, because under that particular question comes in whether the contractor is entitled to claim cost or cost plus time, or time alone. So I can't see it happening before you decide on that. Now, if you decide that it is a man-made disaster, in which case then the contractor can claim as a result of the event from the employer a man-made disaster. You can claim for time and money. But what would the cost be? What would how would he actually calculate that cost? If it is taken as a natural catastrophe, then the natural catastrophe does not allow the contractor to claim cost. It only allows him to claim time. So from that point of view, he's not allowed to get any money.
Okay, thank you very much for that. Another question from the floor. I'm trying to whip through the question as quickly as possible as time is against us. One question, this seems very broad, and I'll probably put it to somebody. So, is there any insurance policy available to cover overhead of construction project during incident like COVID-19? Michael, Earp, is there any insurance policy that covers overhead during this?
So, yeah, there is something in some policy for described as idle costs. Again, checking my notes, continuing expenses. These can be found, they're typically under what's called course of construction policies. Course of construction policy is different from builder's risk or contract works. That is typically where you have a coverage for the construction site under a property policy with what's called a course of construction extension. And under that, you can have some coverage for continuing expenses. The difficulty is it's likely to be a sublimit of a fairly low amount, and we've seen sublimits of only $250,000. That may be sufficient, but that's the extent I've found anything, Nelson.
Okay, thank you very much. Another question from the floor from Luis Villaron. That sounds familiar name. The question is, do you consider that the potential loss of quality due to the work at home, teleworking, could be used by insurance as an excuse not to pay some claims? Is that possible? Michael Salau, Michael, any view on that subject?
I think it's unlikely. I mean, I think the reality is, obviously I talked about the fact that there's more pressure on a consultant and it may be more difficult to work from home. But obviously a policy responds to the negligence of a consultant, however that arises. So I would have thought that's doubtful. I mean, be negligent at home, negligent in the office, etc. I don't think they would. So a pretty simple answer is, I think it's doubtful.
Okay, thank you very much. Another question from Kitty Corinne. I think this is from France. The question goes, if the employer requires in the contract and health insurance, would you think that this insurance can be called upon now as a result of COVID-19? Michael Earp?
Yeah, that again is a very interesting question. When you say health insurance, what type of health insurance?
I think it basically is the health and safety insurance.
Yeah. So I think from health and safety point of view, again, health and safety will come back to liability. You have to create, what is the link from bodily injury or physical damage, going back to the breach of any health and safety obligations. And if you are deemed to have breached those obligations, then that's when the insurance comes in. Unfortunately, I don't see a silver bullet for health insurance in this nature. I would like just to go back to just briefly, if I may, go back to the comment that Michael mentioned about, can you be more negligent at home than at work? I think it's one area that professional indemnity insurers will be looking at very carefully in future renewals, because how are you managing people at home? How are you dealing with collaboration? Because a lot of projects require collaboration. And those questions will be a significant, I think, additional details that consultants will have to provide at the renewal of their professional indemnity insurance.
Right. Okay. Thank you very much. I mean, there's a lot of questions coming through, and I have to apologize profoundly. We've got over 600 people online right now, all of them picking questions coming through. There are some people there who are pretty good with the button and typing away, and sometimes I find it difficult to pick up the thread of the question. So please pardon me if I haven't picked up your question. I am mindful now that we've got roughly about 3 to 5 minutes to finish. And as always do in the previous webinar, I go around and ask the various panel members to give us that word. We've looked at the impact of COVID-19, geography, and what government is doing, what every nation is doing, what impact it makes on their country in terms of people, health and safety, and all of that. We've then gone on to look at force majeure as a big area of issue, interpretation, right or wrong, what does it mean, extension of time, money, and all of that. We then looked at joint venture, which is an area of interest because people want to know exactly where they are in the relationship because the relationship has moved on since then. Where we are now getting through is we've now started to look at, consultant, where we dive into the consultant side, and today we spend time on insurance. So the question to you is really to each and every one of you, starting from Tony, what do you think we should be looking at now? Because it's so much that's been said about where we are and what the situation is, but looking forward, what do we think we should be concentrating on within FIDIC to address the need of the industry at this point in time where everybody's looking for leadership? So I'll start off with Tony. Few sentences, few words.
No problem. I think I've got a couple of things. One of them has been raised or mentioned earlier tonight, and that is the health and safety of people working at home. I've already had a conversation with one chief executive here in Australia who's spoken about the fact that even though he's got the most amazing collaboration platform, the best IT system in the world, everyone in the world in this company is on this same system, the exhaustion of staff because of new work methods, of difficulty, of trying to meet deadlines, the level of exhaustion is quite high. And I do think the health and safety of the people is going to be a critical issue if this, in countries where this extends for a period of time. And in Australia, we've only been in lockdown really for 5 weeks. So, and that's, the result here is huge and it's fantastic. We're down to 6 or 7 new cases yesterday, which is extraordinary, but they're still talking about potentially another few weeks. So I think the health and safety of staff is critical. I think the other part of that is going to be related really to workers' compensation type insurance. And there's going to be a new type of claim coming through there, which is going to take a little bit of work to deal with. And the last thing I think firms, in my mind, really need to start thinking about their way out. How do we recreate a working situation? In Vietnam, for example, the average workspace per person is about 6 square meters per person. That's not a lot, really. In some of the more sophisticated countries, you might be talking about 11. So bringing people back into an office environment, working out how to help them to work safely, given that this virus isn't going away unless you live on an island of one. It's a little awkward to make sure that the risk is zero. So we have to work out a way to get back to work, get the economy going again, and to make sure our companies can get on with their work. So a lot of work, in my mind, needs to go in that territory.
Thanks, Tony. I'm going to go along the same line. Michael, what's your word of wisdom to FIDIC? What should we be looking at? I've heard the word health and safety of people, well-being, and entry strategy. What's your key one sentence for us to take away?
The key one sentence is make sure that your presentation to insurers includes details of your people, your financials, what you've done for supply chain business impact and business continuity, because that will be required. The other thing is regarding, is there an insurance for this going forward? I liken it somewhat to terrorism and war. And I think if there is pure insurance for pandemics going forward, it may need to be some form of pooling arrangement, by each country and may not be in the commercial market.
Okay, thanks very much, Michael. As ever, always looking forward. Peter, from your perspective, you've joined the conversation so far. You've given us CDM perspective on that. What would be the right word of sentence and suggestion for us, for FIDIC and for the rest of the world?
I would recommend that building on what Tony had started, look at at your new operations with enhanced safety, both in your office and at the job site, and work with your clients and contractors to get your jobs back to work. It will require some modifications of your site safety activities if you haven't done them already, but the best thing for the economy and the people is to get the jobs back working again. That's a mitigation approach, and in the final analysis, I think you will find that that's the best way, as opposed to taking more and more time to chase insurance.
Thank you very much. Can I bring Dr. Nael Bunni in? What's your advice to us? One sentence, please, just to close out. What should we be looking at, and what should be the industry looking at to get out of this challenge?
Well, I think really that the various parts of the industry has to cooperate with each other, has to really try and help each other in returning back to normality. Because if they stick to their specific point and not try and see the other side, there's going to be trouble.
Thank you very much. Marcus Salau, what's your closing statement for us and for the industry?
Just two things. First of all, working on enhanced communication with clients, contractors and insurers, that's going to be enormously important. And from a liability perspective, a clear audit trail of why decisions are made, how they're made, and what advice is given, making sure you've got a clear audit trail in relation to that.
Thank you very much. On that note, I'm not quite sure whether we have the time. We are 3 minutes over the time. And I just want to wrap up by saying, I've got the president who is waiting and following us, but I'm not going to invite Bill to come back into because we've run out of time. But let me just try and sum it up. We've been extremely lucky to have Bill supporting us all the way from States. And also we've got Tony Barry from Australia. I'm sure he's desperate to go to bed by now. We've got Peter Tunnicliffe also, supporting us from State. So to all of you, thank you. Michael Earp, sorry I had to wake you up very early this morning, but I'm sure that, things are not too bad. You can go back for the extra hour in bed. Dr. Bunni, thank you very much for your support. And also, Michael Salau, last minute, but you sort of stand the gun. What I can say at the moment is that we are looking at ADR, the alternative dispute resolution, the role of dispute avoidance in the COVID-19. The words that I've had again and again is record. Communication. I hear relationship. Don't be too dogmatic. Don't sit in your corner and fight corner. Get together, find a way out. But more important, I hear the message which is coming loud and clear. This is for our own industry. The market is getting harder. We need to find an affordable solution that is sustainable in our industry. And we need to look at that carefully because the COVID-19 is not going to help. But somehow, the message that I also hear from Michael Earp and others is when you talk to your insurance, present the best possible case. Justify where you're coming from, what the issues are. I spent a lot of time in my early days fighting the issue about joint and several liability. And I know the journey that I travel in that journey. And because we are all in it. Nael Bunni said it. He said, don't get dug down into your own wall. Get together, find a solution. This is exactly what FIDIC promotes, which is about amicable resolution. And we'll be diving into the world of ADR on Thursday. If you have the time, please join us. On that note, I'm going to thank FIDIC President, Vice President, and all those who participated wherever you are around the world. Thank you very much for joining us. We really appreciate your input. The question will be looked at and we'll do everything we can to support you. A copy of this webinar will be available on the website. So within the next 24 hours, please have a look and download and play it again. Thank you very much. God bless. Have a good day.